Okay, in this video, I'm going to show you kind of quickly how most artists tend to handle their taxes and tax deductions, which is to say they don't put much effort into it at all. So I'm doing this so that you can compare an example like that to ones in the next videos where someone puts some effort into deducting taxes and you can see the tremendous difference it makes. So you see the assumption box that we created here earlier, and this is where the income is going to come from in our next sheet. The cash expenses you see down here and the asset purchases will be included in this next sheet, but we're not going to deduct the relevant expenses just to show you what would happen if we didn't really put any deduction effort into it. Okay, so let's turn to option one, no effort to deduct. We're going to be a sole proprietor here, or an LLC taxed as a sole proprietor, and this is how things would play out as far as your taxes went. The gig money calculated from that assumption box turns out to be about $36,000. The tips produced from that would be about $7,200. Now I'm going to scroll down here and look at the cash expenses. Now you can see that I didn't put anything in here, and that was on purpose. Our actual cash expenses were $8,789. We're going to leave that out for the moment in this example. We're coming down here to assets purchased. We did purchase assets of about $3,800 that year. We would have had $3,800 worth of depreciation expenses to put on our taxes, but in this example, we just ignored it because we were being lazy. The home office deduction I'm leaving as zero because we're going to put no effort into that for this example. And the profit and loss of the business turns out to be exactly what it was that we made, $43,680, and that's a combination of the gig money and the tip money. I'm not going to deduct self-employment tax because if you don't put effort into it, you won't get it. And I'm not going to deduct the qualified business income because if you don't put effort into it, you're not going to get it. This is just a little table here that helps me calculate your taxes for you, and we're going to scroll here and see what those would turn out to be. First line, federal tax, $3,467. State tax, $1,200. Social Security and Medicare combination, almost $6,700. The sum of all those taxes for your year are just over $11,000. Now, your AGI here, I want you to just ignore that for the moment. When we get to the very end, I'm going to show you how to compare those with all the options and how it actually impacts you. AGI stands for Adjusted Gross Income, in case you're curious. But the very last line that I have in bold print here is really the most important line of all of them. It goes to show how much money do we get to take home personally from the money we made, or how much money can we also, go and spend on our business if we wanted to expand our business or maybe buy some assets for our business. So we started with $43,600 and ended up only able to spend $23,000 of it because we deduct $11,300 and nearly $80 in taxes. And we had to pay those cash expenses whether we wrote them off or not as deductions. So after all that's said and done, we have left over $23,510. Doesn't really sound like a lot when we were making over $43,000. The next video is going to take this exact same tax structure, but this time we're going to itemize all the deductions so that you can compare the money that you get to keep in that scenario to this scenario.